How is everyone doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, we're going to be covering ICBA's Advocacy in Action for the third quarter of 2025. I love covering this report. It's one of my favorite ones to cover because it's basically just a two-page PDF that covers all of the hot-button regulatory issues that are currently going on in the banking industry, which I love to go over because in a very quick snapshot, everybody can look at and understand exactly what all the big regulatory issues are at this particular moment and if they're going to maybe affect you in some way. But if you want to get this report, I do have a link to it in the description down below. If you'd like to click on it and bring it up to take a look at it yourself, feel free. But let's cover this. Let's go through this for a couple of minutes. So on the far right-hand side, they have a column here that says real results for your bank. So they have three main things here. So permanent tax relief signed into law. So on July 4th, the One Big Beautiful Bill Act was signed into law by the president. The new permanent extension provisions of the Tax Cuts and Job Acts include individual rates, the estate tax, and the Section 199A deduction for Subchapter S banks. So that's great. Congress repeals the overdraft rule. So both chambers of Congress have passed a resolution to overturn the CFPB rule on overdraft. That, again, another great accomplishment right there. And then Michelle Mickey Bowman was confirmed as Fed Vice Chair for Supervision. So again, all great stuff going on there. And now let's get into some of the big things that are still sitting here at the moment. So ICBA promotes a new regulatory and tax agenda for the 119th Congress. So to capture opportunities presented by the new administration and Congress, ICBA is promoting our Repair, Reform, and Thrive, ICBA's plan for powering local economies. Now, I did cover that plan earlier this year. If you want to go back and check that out, I'm trying to think exactly when that episode was. Definitely, it was. I think it was in January that I covered that. So if you want to go check that out, you can go check that out in greater detail. Then we get to the digital assets regulatory frameworks. So ICBA has directly engaged with Congress on developing a regulatory framework for stablecoins for several years. This year, Congress is expected to pass bipartisan stablecoin legislation. In July, the House is expected to pass the Senate Genius Act, which actually did pass, which includes ICBA advocated provisions to preserve existing policy on Federal Reserve master accounts, disallow payment yield or interest on stable coins, which in other words, they just don't want anyone to be able to offer interest on stable coins, thus giving people a more attractive option than, say, a bank CD or savings or money market accounts or bank checking accounts that offer interest. So that was kind of the big thing on that. But the House is also considered, which the House passed through, it's now sitting with the Senate, the Clarity Act, which would create a market structure for digital assets. The bill also creates a risk of community bank disintermediation, which ICBA is engaging with Congress to mitigate. The issue there is that if stable coins really grow, they could potentially pull 10 to 20% of bank deposits out of banks and put them into stable coins, which could hurt banks. It could hurt their ability to, put out credit. It could, in other words, deposits are the lifeblood of every bank. In order to lend the money, they got to bring the money in. So you got to have deposits to lend it out. So if you're losing deposits, that could have ramifications on overall credit and how much credit can be extended to borrowers. So there are some potential concerns there. And again, the Treasury put out a huge report on this at the end of March, which I also covered in another episode. If you want to go back and look for that, basically that was the Treasury report on stable coins. You go check out that episode to get more information on that. But basically, there were three crypto bills that were in there. There was the Genius Act, the Clarity Act, and then the Anti-CBDC Act. So the Genius Act was passed into law. Clarity Act and Anti-CBDC Act are basically both passed by the House and are sitting in the Senate right now. Hopefully, the Senate will get both of those done and get them over to the president for his signature. And then it'll just be a matter about, the finer details of the legislation and getting those things implemented implemented, and ultimately, what do those things look like? Now, I will say, I really hope the Clarity Act and the Anti-CBDC Act, I hope they both get passed, because this thing operates like a three-legged stool. And we got one leg of the stool passed, but we need to get the other two passed, because if the other two don't get passed for some reason, you're going to end up with this one-legged stool that's going to flop over, and it's going to end up being basically a giant mess. So, but we'll see what happens with that. Next thing, trigger lead legislation passes House and Senate. The legislation would restrict credit reporting agencies from the sale of consumers' contact information when they apply for a residential mortgage, i.e. the trigger leads. Has now passed both the House and the Senate. Before the legislation can be signed into law, a minor difference between the House and the Senate version must be resolved. The House bill requires a GAL report, while the Senate bill does not. So ICBA is pressing Congress to finalize the legislation as soon as possible. Trigger leads compromise consumer privacy, create a flood of unwanted solicitations, and create consumer confusion. Yes, get rid of this as fast as possible. Obviously, I'm very dismayed at the moment, because Congress is taking their 6-week sabbatical that they do every year and won't be back now until September. So we won't get any resolution on this until, hopefully sometime in September. But I mean, this needs to get done. I mean, this has just been lingering for way too long. The trigger leads are just a massive nuisance on banks right now and consumers. And it just this thing needs to get nipped in the bud to stop the consumer reporting agencies from selling these leads. So hopefully that gets resolved in the next couple months. Challenges to the 1071 rule and the statute. So ICBA continues to oppose CFPB's 1071 rule, which requires lenders to collect and report personal data on small business credit applicants. ICBA intervened in a suit against the CFPB for exceeding its statutory authority and acting arbitrarily and capriciously. On February 7th, 2025, a U.S. Court of Appeals temporarily paused the rule and extended its compliance deadlines until further notice. As advocated by ICBA in Congress, ICBA supports the 1071 repeal to protect small business lending act, and sponsored by Rep. Roger Williams and Senator John Kennedy. Short of full statutory repeal, the law would significantly improved by House Financial Services Chairman French Hill's Small Lender Act, which would reform 1071 so that fewer community banks must comply. Yeah, and I am hopeful those things will get done. Obviously, 1071 was one of the big issues on my bucket this year. I basically had 4 big things, and that was beneficial ownership information, open banking, the 1071 rule, and then also CRA. So those were like kind of the 4 big things there. And so far, all 4 of those things have gone really well. I am expecting that the 1071 rule hopefully will get repealed altogether and get back. Again, it's just more, in my opinion, government overreach. This insatiable data, this insatiable need to just collect endless amounts of data on you. So again, I think hopefully a good thing there. Going into the second page here, so we've got support for agriculture. We got ICBA calls for taxation of larger credit unions. Just had another, the purchase of banks by credit unions has slowed down significantly so far this year, but we just had another one announced, I think, last week. And so that is, again, I think every time a credit union buys a bank, it's going to bring this back to the forefront. And I will say, there seemed to be some momentum with this toward the end of last year, but then, and even at the beginning of this year a little bit, but then it's kind of died off, as obviously all these other issues have come to the forefront momentarily. But this, no doubt, at some point has to get looked at. I mean, I'm a huge advocate for basically if and what it says here basically is in March, ICBA adopted a policy resolution calling for repeal of the outdated tax exemption for credit unions with assets of $1 billion or more. Large credit unions have increasingly abused and exploited their tax exemption and have become nearly indistinguishable from tax-paying banks. Yes, absolutely. So I think basically once a credit union is over $1 billion or larger in assets, that these tax exemptions should go away, because they're not a tiny little credit union anymore. So I just think that's where it stands. So we'll see what happens with that. updating regulatory thresholds. So ICBA is working with Congress to update asset thresholds for the application of regulatory mandates across the board. Tiered regulation with appropriate thresholds recognizes the significant differences between community banks and large complex institutions in terms of the risk they pose to consumers and to the financial system. Yeah, there's a number of bills right now that are in the House that are being considered. So we'll have more update on that one coming soon. ICBA check fraud task force. So yeah, the task force continues to work on the big check fraud issue. And then obviously we get to one of the big ones, the Dodd-Frank Section 1033 rule. So in June, the CFPB asked a federal court to vacate the agency's 1033 rule on the grounds that it was unlawful. While the final rule exempts community banks with assets of less than $850 million, as advocated for ICBA, it requires non-exempt banks to create and maintain an API-enabled developer portal, which non-bank fintechs and other third parties could use to access customer data, creating a threat to consumer data for security and privacy. Moreover, banks are not permitted to charge reasonable fees to third parties to offset the significant costs of compliance with this rule. Now, I hate open banking. I absolutely hate it. I abhor it, and I actually abhor it. But how do I want to say this? There are new developments here. So PNC Bank and Jamie Dimon over JP Morgan recently started floating the idea that, hey, you know what, if we can get paid for this, we might change our mind here on open banking. And while I have always pointed that out as one of the biggest flaws in the open banking rules, the fact that, banks basically are forced by law to give all their data away to whoever basically backs the truck up to the bank. Hey, unload your data. Give us everything you got. And basically they have to do that for nothing, while at the same time taking on this immense amount of risk, cybersecurity risk, identity theft, all kinds of fraud. Like just the amount of risk is just ridiculous. So, and there's basically no profit motive. Like, why would a bank want to do this? Why would a bank want to give? I mean, most people will say that a bank's assets are its most valuable thing, meaning its loans. I would make the argument that a bank's data is its most valuable asset in today's world. And why would you just want to give away your data for nothing? Like, it just doesn't make any sense. So, but I am a little concerned that some of these bigger banks are saying, well, wait a minute, if we can get paid for this, we might be okay with it. And I'm just flat out, I don't care if banks get paid for it or not. I like Google already has enough of my information. They don't need all my bank data. Okay. Meta doesn't need my bank data. Amazon doesn't need my bank data. Okay. Microsoft doesn't need my bank. None of these big tech firms need all of my banking data. They don't need to see where I go shopping every day. They don't need to see what I buy, when I buy it, the monthly bills I pay. They don't need that. They don't need it. I don't want them to have it. I'm absolutely against this. And I hope that, this thing continues. I hope this thing continues to get taken care of in the courts is my hope there. And then finally here, we have the Federal Housing Finance Agency, GSEs, and the Federal Home Loan Banks. ICBA sent newly confirmed FHFA Director Bill Pulte a letter outlining ICBA's priorities regarding the GSEs and the Federal Home Loan Banks. That letter made the following recommendations. FHFA, along with the Treasury, should move to release the GSEs from conservatorship, meaning Fannie Mae and Freddie Mac. I've done a number of episodes on that. If you want to go check out that issue, yes, I do believe that they should be released from conservatorship, and I'm hoping that happens sooner rather than later. FHFA should pause and reevaluate the credit score implementation project. Yeah, we just got some word on that. They are going to allow the, I think it's the FICO 4.0. I think they are going to allow that to be used as another option if, I guess, banks so choose to want to use it. So again, I'm sure there'll be more to come on that. And then FHFA should pause and reconsider the over 50 recommendations from the Federal Home Loan Bank System at 100 report and not move forward with proposals that would focus the system away from its vital liquidity mission to community banks. I thought that the FHFA already said that they weren't going to move forward with that proposal or those items on there. maybe I could be wrong, but I thought that Bill Pulte coming in basically said that that was a non-starter, and that was going to be, kind of crushed and put off to the side. So I don't know. We'll have to keep, like I said, we'll have to continue to keep an eye on that one. But like I said, and the one big thing that is missing here is the CRA rule. Basically, we just got news that the proposed new CRA rule that was supposed to take effect is basically done. I mean, that's getting squashed and is going away, and CRA will remain as it has been for a long time, which I think is fantastic. I think it's a huge another huge win. So, so far so good on all the big items I was looking for this year. I mean, the 1033 rule at the moment is getting taken care of in the court. We've got some great laws that are potentially going to take care of the 1071 rule. So we'll see what happens with that. Beneficial ownership information, the whole database has been killed for the moment, but BOI is still there. Banks are still required to collect beneficial ownership information. So I think some more work needs to be done there in terms of not having to put the burden on banks to collect that information. So there's still a little bit more work there to be done, but I think the main threat of this giant BOI database and everything has been killed. At least for the moment. I will say that there's a slight chance that could come back later on. We'll have to see what happens, but again, so far so good. So like I said, I think for the most part, I think regulation wise, I think we're in the industry is in really good shape, and things seem to be moving along. And I'm expecting, hopefully in the next 5 months here, we'll get some more wins on all these items. But we shall see what happens. But like I said, I hope you guys like this. I hope you guys like these kind of episodes, gives you some quick coverage just to bring you up to date on what's going on regulation wise in the banking industry. And with that, I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below. I'd love to know if you guys got any specific comments on these particular regulations. And finally, please make sure to check out some of the other content on the channel, as I like to think I've got a lot of great stuff out there for everybody. So, but with that being said, have a great day out there. Thank you for listening, and I will see everyone again real soon. Thanks a lot.